Welcome back to the Real Estate Deal Room podcast, where we talk real numbers, negotiations, real deals, real financing strategies, how you can close smarter, and how you can structure your deals much better. This particular episode is bank statement loans for real estate investors, realtors, and foreign buyers. I am Ebonie Beaco, Mortgage Strategist and Senior Loan Officer, and today I am speaking directly to real estate investors and realtors about a loan program that constantly comes up, and that is bank statement loans. So, when your tax returns don't tell the full story, the bank statement loan can tell the real story. What they are, I'm going to talk about. Who they're for, I'm going to tell you, and what type of properties they work for, how investors and realtors are using them to keep their deals moving instead of watching them fall apart in underwriting. So, if you've ever had a borrower with a strong cash flow, or you're a real estate investor who has a strong cash flow, solid assets, and a great property who keeps getting declined just because of how your income is reported, this podcast and episode is for you. Bank statement loans are designed for borrowers who earns money outside of the traditional W-2 income. That includes real estate investors, self-employed borrowers, 1099 contractors, business owners, foreign nationals, and Canadian investors who's buying property here in the U.S. These are borrowers who legally write off income. They use the depreciation. They reinvest into their businesses and still have consistent deposits hitting their accounts month after month. Traditional loans actually focus on the tax returns, but the bank statement loans focus on cash flow. So, here's how these loans work in real life. Instead of using W-2s or tax returns, lenders will review 12 to 24 months of bank statements to calculate the income. When personal bank statements are used, up to 100% of the deposits may count. But instead, when business bank statements are used, lenders typically use about 50% of the deposits for the bank account. Now, understand this. Lenders are looking for consistency. They're looking for stability. They are not looking for perfection. They are trying to make sure that you have a consistent amount of deposits that are coming in month after month, week after week, so you can still use your business and your personal bank statements and combine them together. Now, these are fully documented loans. So the bank statement loans are still fully documented. It's not like, it's a half-ass loan, right? This is actually a real loan. The credit still does matters, but the asset, when it comes to the bank statement loans, matters just as much, if not more. The reserves are important because when it comes to these lenders, depending upon the program, based upon your credit and the type of property, they're going to require you to have the reserves. They're going to require you to have 3 months or 6 months or 9 months, even 12 months reserves. But it depends upon the lender. The difference is that income is evaluated in a way that aligns with how real estate investors actually earn money. So this is not a shortcut. It's about using the right loan for the right deal with the right lender. Now, let's talk about the different type of properties these loans work for, because this is where real estate investors and realtors really start leaning in. Bank statement loans can be used for a primary residence, a second home, and an investment property. That includes single-family rentals, long-term buy and hold properties, and small multi-family deals. The loan amounts can go up to as high as $5 million, and depending upon a lender, it can even be $10 million. depending on the borrower's profile, and the type of loan may also depend upon their experience, not just the credit and the assets. So the loan to value ratios can go as high as 90%. Think about it this way, right? I want you to think about a buy and hold investor whose tax returns show low income because of all the depreciation is wiped out. But the bank statements actually show strong rental deposits every single month. A bank statement loan allows that investor to qualify for the next acquisition without restructuring their taxes or selling off any assets or trying to pay Uncle Sam the additional money that they may or may not owe. So, with that being said, bank statement loans can be actually great, especially if you have multiple streams of income that's not being reported to the IRS, but it is being deposited into your bank account. I want you to think about a fix and flip investor whose income comes in waves. One year looks great, another year looks uneven. A bank statement loan uses deposit history instead of tax returns, so that real estate investor can transition into a rental or portfolio strategy. Let's talk about Canadian investors and foreign buyers. This loan can definitely be a game changer. U.S. lenders don't always know how to interpret foreign tax returns or cross-border when it comes to income structures. But bank statements, they know how to convert that. Bank statement loans shift the focus away from the U.S. specific tax form and towards the deal with verifiable deposits, which makes cross-border investing far more achievable. So for my realtors, knowing this loan exists can actually save deals. Knowing how this program works can save a lot of deals. Knowing how and when to use it can unlock the buying power, and it can keep the momentum going. This is why understanding financing, even as a realtor, is extremely important. It's just as important as understanding the property that you're selling. Now, as a real estate investor myself, I have flipped so many properties and I have so many different streams of income coming in that I have always used bank statement loans. And the reason why is because sometime as a real estate investor who has multiple streams of incomes in other businesses, you tend to have money coming in different directions. Some money is reported, some money is not reported. And then even the money that is reported, if it's too much, of course, you're depreciating everything. So by the time it looks like you're done, you went from looking like you made $3.8 million to having a negative of $300,000, meaning you didn't make anything. But as long as you have all of your bank accounts, it's going to show how much money that you've actually made and how much money you had coming in when it comes to your deposits. From an underwriting standpoint, I became an underwriter at the age of 20 years old. That was actually before I got my mortgage company, right? And as an underwriter, I knew how to underwrite these loans because I was a loan processor at the age of 16. And I saw so many people that did not qualify because they didn't have proper documentation when it came to bank statement loans. But yet their tax returns and their W-2 is only saying that they make $80,000. However, they had a lot of deposits going in, but they were going in so many different accounts. So I'm telling you this, that if you are that self-employed borrower, that 1099 contractor, that real estate investor, and you have money going into several accounts, if you know that you are in a process of potentially working on your game plan to invest in real estate, I highly suggest that you have 2 to 3 accounts, maybe that one account, but at least the 2 accounts, no more than 3, that you're consistently having deposits going into, because that is the account that I want you to use when it's time for your bank statement loans. If you are a real estate investor, a 1099 contractor, or someone overall that is self-employed, and you have a lot of withdrawals coming out of your bank account, such as bills, please use that particular account as a separate account as your bill payment account, because the account that you're going to give your mortgage broker is the one with all of the deposits, not the one with all of the withdrawals. Because what you don't want them to do is, by the time they see all of your deposits and then they turn around and do like the balance and they see, holy shit, you have a lot of bills coming out. So now, depending on your underwriter, they're actually underwriting that. I tell you this from personal experience. I work with over 240 mortgage lenders and banks. I specialize in real estate investors, complex income scenarios, as well as non-traditional borrowers. I know what goes into these loans. I know what happened with these loans. Knowledge is often the difference between a deal closing and a deal stalling, or you're losing your earnest money. So if you're a real estate investor or realtor working with self-employed clients, foreign buyers, or anyone whose income doesn't fit neatly into this perfect box, and you want to explore whether a bank statement loan fits the deal, please feel free to send me a message. I will assist you. Also, you can visit www.homeloansnetwork.com to learn more. And before we wrap up, make sure you tune in every single Wednesday for Wind Down Wednesdays, because I talk about everything from real estate investors to first-time home buyers. Every Wednesday is different. You will learn what's happening in real time, whether it's within the industry or the market as a whole. It's interactive, it's educational, and it's a great space for real estate investors and realtors to learn and connect. Please come with all of your questions and send me a message. If you have found this episode helpful, subscribe, share it, and with other investors and realtors. And join me every Wednesday live on Wind Down Wednesdays at the Real Estate Deal Room. Until next time, analyze the deal, structure the loan correctly, and stay in the deal room, because guess what? I got you. And I love structuring and closing deals, especially complex situations.